I think that a lot of the pain that the Bitcoin community has absorbed is because of the slow response of the regulators.
Michael Saylor discusses the real reason for the losses the Bitcoin community has endured in recent weeks. He asserts that Congress needs to address a gap in the regulation of digital assets. The gap has contributed to the problems of weak investor protection and fraud in the distribution and trading of digital assets. Congress will thus help crypto investors strengthen the commercial use of crypto assets, limit illicit payment, and bolster cybersecurity by using the new regulations. Let us view this video where he points out the way forward for the Bitcoin community.
If the regulators had moved faster, in order to, if they had moved more aggressively in 2018 or 2019, you wouldn't have seen all of these, crypto casinos spin up the way they've spun up. One of two things will happen with regulators. They will either move much more aggressively in a fairly regressive, conservative approach, and that means they'll just shut down all the other crypto innovations, in which case Bitcoin will still be a beneficiary. Because in a conservative world, Bitcoin is the apex crypto property and the apex crypto asset, and people will simply hold it as a long-term store of value. And if the regulators said everything in the crypto ecosystem is now, forbidden, all you can do is buy Bitcoin and hold it and sell it at the end of its useful life, treat it like gold, Bitcoin would still benefit. Right? The other extreme would be the regulators act proactively, they act progressively, and they provide a path to registration of a digital commodity, a path to registration of a digital security, a path to registration of a digital token, a path to registration of a digital exchange, and a path to registration of a digital currency. Right? And if they said you want to issue Tether, you have to file monthly statements, register with this, banking supervisor, and take on these responsibilities to have these reserves and abide by these guardrails, you can issue a stable coin. If they said that, if they said, okay, well, you want to issue a digital security, you have to do it this way, fill out these forms, and every month or every week or every quarter, this is what you do. Then what you would see is a collapse of all the true scams. You would see the VC that have been trying to launch these other things, they would have to go through a registration process. Now you would actually understand, and you have the full disclosure and transparency. Many entrepreneurs would say this is too hard. You get the sense that some of them never bothered to hire a lawyer or get a legal opinion, right? It's like I have to pay for lawyers and accountants in order to be in the business. This is too hard. You'll see a rationalization. 99% of all the tokens will go away. You will see some stable coins. There's a bona fide need for a coin like a Circle or a Tether. The world wants it. Maybe not in the U.S., but outside the U.S., the world wants it. So I think you would see some of those. I think you would see some digital securities. I think you would probably see actresses and musicians. They would say, hey, I'm going to issue my, Katy Perry token, right? But they would do it with a lawyer in the compliant, ethical way because they don't want to risk their reputation. The industry will morph. It'll change. And at the end of the day, Bitcoin will benefit from that too. It's not clear to me which approach is better for Bitcoin. The truth is, the only thing that is clearly good for Bitcoin is if we were able to disentangle ourselves from the crypto casinos, right? Because the crash of Terra, the crash of Luna, the crash of Celsius, the crash of FTX, these have been painful events, and Bitcoin is cross-collateralized. And they're selling Bitcoin when they're crashing their doggy coins and their hamster coins and their yo-yo coins. And so shutting that down will be good for Bitcoin. It'll take the volatility out of Bitcoin. And then these other regulatory guidelines, at the end of the day, if you simply said, you're not a commodity unless you're an asset without an issuer, it would knock out the top 50 coins other than Bitcoin, and every institutional investor would say, I get it, Bitcoin is special. Bitcoin is a commodity. Ethereum, Solana, Ripple, name every other coin that ever had an ICO, every coin that ever had a pre-mine, every coin that has a centralized foundation, a management team. Every other coin would be deemed as a security, and as a security, they would all have to make fair disclosures. When they made those disclosures, 95% of them would collapse. A few would be left, and people would say, well, this looks kind of like a tech stock. And then they go, well, maybe I like the tech stocks better. Probably they'll collapse, right? And I don't know what's left, but I mean, the argument in favor of a digital security is, wouldn't it be great if I could issue it faster and it traded 24/7, 365, and then someone could, like, if you said to me, you can take custody of your Apple stock on your Android phone if you live in Zimbabwe, and I can't get a JP Morgan account, I would think, okay, well that's good. I can give Apple stock to my friend in Zimbabwe on an Android phone. So maybe the idea of a security circulating on a mobile network outside of the control of the 20th century banking system, maybe that's a good idea. But on the other hand, probably the digital security I want is Apple, as opposed to, all the crypto securities that are out there. I think one of the lessons is you have to separate your P&L from your balance sheet. So if the way that you're making money is and Ross's letter, he points out that they make money with 10 different strategies. One of them is Bitcoin. The other 9 strategies are firmly grounded in the conventional economy of the world. So if you're a doctor, you stay a doctor, you're the best doctor you can be, you serve your patients the best, and you maximize your income as a doctor. And then on your balance sheet, you have assets, and on your balance sheet you would have a variety of assets. Whatever property you're going to hold for a long period of time, you could have a diversified portfolio of property, of digital property like Bitcoin, and you might very well hold real estate, and you might own a share in a company, right? But separate your balance sheet from your P&L. At MicroStrategy, we have a traditional enterprise software company, and we keep 99% of our employees focused upon that business, which generates substantial cash flows. And that's what allows us to pursue our Bitcoin strategy by sweeping those cash flows into Bitcoin in a form of corporate dollar cost averaging. I think where things get dangerous, which is what happened with FTX, is all of a sudden the way they make money is also their balance sheet strategy. And if you're going to have a balance sheet with a bunch of FTT token, and then you're going to use it as collateral to borrow against it to generate yield, when the token collapses, the P&L collapses, and vice versa, and the entire thing becomes a house of cards.
Seems so obvious too.
Hindsight is always 20/20, and then of course, to the extent that you actually take on any debt, you generally want to take debt that is secured against assets that don't get marked to market. Like the best form of debt is I have a mortgage against a house, and the bank's not going to show up at my door and value my house down by 80% on Monday and then ask me to repay the mortgage on Tuesday. Right? Use common sense, right? If you were to borrow against a stock, like a liquid asset like Apple stock or S&P index, or even against Bitcoin, you want to be ready for 80% drawdown. And most conventional risk managers, they would, for example, they would never advance more than 50% loan to value. And then when you get close to that, you would think, okay, well now I got to be ready for a 50% drop from here. And so if you have a very conservative view, right, on liquid assets, you would say you never want to go beyond 20% loan to value on a liquid asset, even if you think it's rock solid. Of course, if you're borrowing against a token printed out of thin air, right, like FTT, well, that can go to zero overnight because there's nothing backing it. So I think be conservative with the way that you use debt. be rational and thoughtful in how you distribute your balance sheet. And then on the P&L side, figure out what it is you can do that is making a unique contribution to the world. And if you're the world's best bakery on this city block, that's what you do. And if you're a doctor or a dentist, that's what you do. And just make sure you do that thing. And if you're in a currency like a very weak developing nation currency where it's collapsing at 100%, 100% inflation a year or more, you're sweeping your local proceeds, into a combination of dollars that you're going to hold for 12 months, and then Bitcoin that you're going to hold for 12 years, right? And if you think in terms of your long-range asset, your short-range asset, and your immediate currency, then I think you'll probably be in good stead. We need to educate a lot more people. What keeps me up at night is that there are so many mainstream influencers, so many policymakers, so many investors and money managers that still don't understand half an hour or an hour worth of Bitcoin fundamentals. But the world is still full of incredible numbers of people at every level, from the top ranks of our government to leaders, captains of industry, down to rank and file. The world's full of people that don't understand the theory of money. They don't understand what money is, right? They would say, oh, money is a medium of exchange. Okay, so therefore I guess the peso is just as good as the dollar, is just as good as Bitcoin, because they're all just mediums of exchange to somebody, right? And so the lack of awareness of the theory of money, that's something that keeps you up at night. The world is full of people that don't understand the power of an open, permissionless monetary network, right? The fact that you can move $1 million from here to Africa and you could do it in an open rail, and then you could do it 1 million times cheaper than the conventional 20th century banking system, and you could do it 1 million times better, and then you could program it 1 million times faster. So most people, they don't realize that money is technology. They don't really understand what true non-defective money is, because every monetary system in the history of the world has collapsed, and every money that's ever been invented before Bitcoin was objectively defective mathematically and physically. And so because people don't have that fundamental understanding of the physics of money, and they don't understand that money is technology, they're not looking for the solution. They have this massive blind spot. But they do have power, right? The world is full of people with money, with power, and with influence that are ignorant of these two basic principles. And the first principle explains to you why you would want to own Bitcoin. And the second principle explains to you why the future is 8 billion people with devices plugging in via the Lightning protocol to each other to trade and to run the economy of the 21st century. So we have to go and educate those leaders so that they embrace and adopt this physically perfected money and this ethical open network.